There is not a single person in the entire planet that knows why stocks go up or go down. Now, that may seem like an absolutely incredible claim I am making, but let me tell you why that is true. So, I started my career at Goldman Sachs in the investment research division. Our counterparts were hedge funds who were very short term focused. Their success financially would be very dependent on sometimes single day stock moves. So, anytime a stock went up, they were always very keen to understand why that was so. However, there's many times when a stock will move up or down, and there's not a lot of news out there. Now, what people will tend to do is they will attribute that movement to the news that they can find. And so, for example, investors may blame the Fed, saying that there's a different likelihood of them cutting rates. They may point to different events in the Middle East, but there are always millions of things going on that can always impact the price of a stock. And so when I was at Goldman Sachs, I would very often be asked, why did this stock go up or down? And there was not always a clear answer. There would be some news articles out there that you could maybe point to as being a partial cause of the movement, but they wanted a definitive answer. They didn't want you to say, well, we're really not sure. It's going to be a flurry of different things. It could be the fact that the Fed won't cut rates for another 6 months. It could be some new war in the Middle East. It could be the potential for different legislation. They weren't interested in that. What they wanted was a single answer. And so we gave it to them. I was often telling these hedge funds specific reasons why these stocks went up or down. And they would take those answers, and then very quickly that became, well, Goldman Sachs said XYZ, so it must be true. Now, we could talk about why there's such a human need to have a definitive answer and not be willing to accept any sort of uncertainty, but that is not what I want to hit on in this video. What I want to emphasize is that when stocks go up and down, there really is no single reason that exists out there. Now, there are certain circumstances where it overwhelmingly seems like a certain event has been playing a role in the driver of the stock prices for the day, and it is certainly possible that that is the case. It very much was true that while COVID was starting and the stock market was melting down, that the reason why stocks were selling off as much as they were was an ever-increasing likelihood of a pandemic. But how much of that stock price movement are you going to attribute to the pandemic itself, to different secondary and tertiary factors that could be the result of the pandemic, and then also different legislation that can be in response to it? Very often, there is one news event for the day, and it is being attributed to a stock price movement that may be up 2%, up 3%, up 4%. And now throughout the day, it's not like that event is changing. It's just the same event. They just keep attributing different stock price movements to it. And there's all sorts of comical examples of this where you could see newspaper headlines where the exact same headline has been attributed to stock prices going up and stock prices going down. You could say war in the Middle East is going to cause oil prices to increase, and that's going to be a negative for the economy. Or you could say that that's going to slow the economy and then cause Powell to want to cut rates, which is going to be a positive for stocks. You can really make any sort of narrative that you want to try to explain a certain movement, but it doesn't mean it's true. And in fact, you would never know for certain whether or not it's true because none of this is ever reproducible. Now, I want to tell you another sort of point to back this up. Another firm that I worked at was one of the largest mutual fund managers in the world. They manage over $2 trillion in assets. That is trillion with a T. Now, very often they held so much stock in some of these businesses that they were the largest holder. And despite them being the largest holder in a lot of these businesses, they still were never clear why certain stocks went up or down. In fact, there were some days where we would be the largest purchaser of that stock, and it still wasn't clear what the drivers were of that stock, what the other parties were thinking about it. And of course, that is always going to be the case when you're in a market, because when you're buying a stock, someone else is always selling it. When you are selling a stock, someone else is always buying it. And they're going to do so for a variety of different reasons. If you think of the actual individual on the other side of that transaction, and you yourself have probably been that individual, how often were you really thinking of these events in the newspaper when you bought or sold a stock? Maybe very often you were thinking of something that had nothing to do with it at all. You could have been thinking of your own analysis. You could have been thinking that there was another opportunity you like better. You could have been thinking that you're going to buy a car and you needed to raise capital. There are so many different reasons why someone will sell or buy a stock. And it is entirely fallacious to believe that you will ever be able to distill it down to one reason. And that problem doesn't get any easier when we aggregate stocks together into an index and say, why is the index up and why is the index down? In fact, it just gets more and more complicated trying to attribute the stock price movements to any sort of singular cause. And the reason why you need to understand this as an investor is so you don't get scared. Very often you're going to see that prices were being driven by a certain headline, except it is your job to understand that that's probably not true. Yes, if there is a war outbreak somewhere, and if energy prices do rise as a result, there is going to be an impact to your portfolio. But what exactly that impact is going to be multifactorial. That means that there's going to be many different sort of ways that your portfolio is impacted beyond just energy prices go up equals bad. What I want this channel to help you do more than anything is to think for yourself as an investor. You really need to build the confidence that someone else doesn't actually know better than you. And yes, you do need to build a lot of experience and do a lot of research to get to that point, but you should get to that point where you no longer believe anything you just read in the newspaper just because it's there. And in fact, very often, some of the best opportunities you will find as an investor are when you are going against what is said in the news. One of my first investments was in Apple over a decade ago. And part of the reason why I started researching that stock in the first place was because the common narrative around that time was everyone would buy one iPhone and then they'd be done with iPhones forever. And then soon enough, Samsung would come out with a cheaper iPhone and that would be more popular and that would pressure their margins. And very quickly, Apple's iPhone would just be a commoditized product. That was very easy for me to understand. That's such a farcical understanding of consumers' love of Apple and also just the advantages of the Apple product at the time. And so I want you to be aware of the news and I want you to understand what people are saying, but you don't actually want to put weight in it as it is true. Because very often it's at these sort of pinnacle points where you can make a decision that is different from the crowd. And that could actually be when you really add a lot of value as an investor. And so please remember, whenever you hear that stock X is up because of XYZ reason, put a probability on it. Maybe that's 30% of it. Maybe that's 40% of it. Hell, maybe it is 90% of the reason why it's up, but you don't know for sure. And there's certainly other factors involved there too. And understanding this can also help investors just make better decisions. Because sometimes when you believe something in the news is actually driving the stock prices, it can make you kind of fearful, especially if you're thinking about war or hyperinflation fears or whatever it is driving stock prices. It can make you more emotional. And so if you haven't already checked it out, make sure you watch this video here to understand the role that emotions play in investing and why it's so important to have a good grip on this if you want to be a successful investor. If you found this video helpful at all, please go ahead and hit like and subscribe and drop any questions you may have in the comments below.